Welcome to the Lego bricks of finance as a platform. To kick this off, I don't know all of your bios extensively, so I'll let you introduce yourself to the team. The laggard on the panel, Matthias, you can start.
Good morning, my name is Matthias Kröner. Good morning, bonjour. My name is Matthias Kröner. I'm the co-founder and CEO of Fidor.
Absolutely. Nick.
Hi, morning all, bonjour. My name is Nick Ogden. I'm the founder of ClearBank, and before doing this, founded another business called WorldPay.
My name is Kim Fournais. I founded Saxo Bank with a partner 25 years ago, and we are really focused on delivering full services for traders and investors globally, as well as banking as a service.
And Gilles Gade, I'm founder and CEO of Cross River Bank in the US, involved in predominantly marketplace lending as well as payments.
Very good. So to kick this off, obviously the big news over the last couple of weeks in this region has been the Open Banking Initiative in the UK. Much ado about nothing initially in terms of we did the launch, but it's going to take some time for the impact of this to occur. Having said that though, we're starting to see more and more bank utility surfacing through technology players, third-party players, and so forth. This seems to be a trend. We talked earlier about China's mobile payments market. 92% of the mobile payments traffic goes through two non-bank players there, Tencent and Alipay. So this is definitely a trend. So let me start maybe with Mathis. We see a lot of non-bank FIs sitting on top of bank platforms, number 26, Moven, Acorns, Digit, and so forth. But what's the business model driver for a bank with a charter to work with fintechs like this?
Well, thank you, Brett, for that question. Well, actually, I think if I may see it a little bit out of my Fidor view, we are very much convinced that, for instance, a small team like ours cannot do any kind of invention on itself. So this is why we are, very happy to have contact with each of those guys here on the panel, by the way, because we need to be open culturally, not only technically, to listen to any kind of special concept which we can learn from, which we maybe can adopt on, which we can dock onto, which we can maybe seamlessly integrate in order to deliver this to our customers, which then would bring us to the Lego thinking or Lego philosophy, actually, that you have a series of components, you are kind of tailor-made, creating a tailor-made service for your existing customer base and trying to achieve the maximum value for your customers. That, by the way, is the major purpose why we would do anything. Value for customer.
Kim?
Well, I think Lego is a good old Danish solution, and I think it is really about the Lego, about creating a modularized client experience as well as the entire value chain. So I think clearly technology, new regulation, but also very much partnerships, because I think in the old days everyone tried to do everything for everyone everywhere. That's history now. It can't be done by even the biggest ones. So I think this collaborative spirit of really creating unique services for the clients are changing the world. And there are clearly a lot of innovative companies and people and solutions working on open API for kind of a common theme of creating win-win with the clients. It's going to change the world, and it's only just begun. So it's interesting times.
Now for Cross River in the US, US is a fairly unique market, has a unique president.
Small.
Yeah, small market. What was the driver for you guys in terms of going down this partnership route?
By default, honestly. It's just that the core processors in the US are terrible and very difficult to work with, not providing the adequate solution that the banks are equipped to be able to provide a good product to the fintech companies. You do need a bank to transact in the US. Visa, MasterCard are imposing all transactions to go through banks, to settlement banks. So we just needed to come up with our own solution. So we just acquired a few developers. We have now 50, and just develop our own products, mostly back-end, by the way. So deviating a little bit from bank as a service, more what we call bank as a platform.
So I'll direct this to Nick, Kim, and Jill, to you too as well. In terms of the regulatory response to this, we've seen a variety of regulatory responses depending on the markets you're in. Some markets tend to be a bit protectionist of the incumbents, others are aggressively, like Singapore, aggressively moving towards sandboxes for inclusions of fintechs. In your individual markets, how do you feel the regulatory response? What do you feel the regulatory response has been to this sort of change in posture with these fintechs coming into the space? Nick, do you want to?
I think two things. In 2014, I was standing at a conference not dissimilar to this, talking to our payment services regulator, and I asked the question as to why the UK hadn't had a new clearing bank in like 250 years. All we'd seen is natural market consolidation, which is the same in many markets around the world. And the challenge that I sort of threw up was that every fintech needs a bank. And the problem with this, the market as it was then, and still to a large degree is today, is that you immediately end up with competitive vibrations between customers of banks and the banks who see the customers as a threat to their market share. So I suggested that what we really need to do was to start again, think again, and have a neutral independent bank that sat alongside the incumbents. And so having taken that position, and my expectation was we'd never get this done. I was absolutely believed that there was a political or regulatory reason in the UK that had stopped anybody doing this before. And I was really surprised when the payment service regulator came back and said, well, actually, it's probably not a bad idea. If you want to have a go, have a go. And that's how we started. And so there was, from a timing point of view, 2014 was when the regulators, I think, were realizing that post the global financial crisis, they actually now had cleared some of that mess away, and they needed to refocus on market change. So I think that the UK regulators certainly are open. Even the Bank of England has a sandbox, and I think that's replicated elsewhere.
Kim, the broader EU?
Well, I think first of all, this is about reducing friction costs in the global economy, and people are tending, at least in where I come from, to divorce twice as often as they change their bank. So there's also a cultural perspective behind this, right? I think with the PSD2 and the GDPR and so forth, things are dramatically changing, and I don't think that this is really stoppable, because in the end it's going to benefit consumers, and business models are changing, technology are changing, regulation is changing, and I think actually regulators, they want to see competition, and it takes time, but I think there's a lot of good signs to that. So obviously that varies where you are, but I think it's a global trend, and I think it will continue. So I'm very positive on this. I think there are lots of also cultural aspects that needs to be dealt with in order to drive this forward. It's not only regulation and technology, it's really this partnership thinking that I think is not convenient for everyone to embrace.
And the US is, again, quite a unique market from a regulatory perspective, with state regulators and then federal regulators of varying ilk. So when you guys made the decision to introduce program managers onto your platform and so forth, how did those discussions go?
They're still ongoing.
Yeah.
8 years going now. And I don't think we have enough time to talk about US regulations. By the way, there are 12 bank regulators and federal regulators. There are about 50 state regulators, and each one has something different to say. Very different to coordinate all the desires of all these various regulators. I mean, obviously, it's a tremendous amount of challenge. The banks and I would say the primary problem, which is very different than what you may be experiencing in Europe or other jurisdictions, is the fact that at the end of the day, the regulators will always hold the banks responsible 100% for every single loan that is originated by a third party, or every single payment that is originated by a third party. And it doesn't matter if that entity is also regulated by, whether it's FinCEN, whether it's state regulators for state licenses. So the banks ultimately are holding the bag. We're the last line of defense. That's probably a little bit of a deviation from the rest of the world, I would say.
Very interesting. Now, Matthias, you've recently, of course, been acquired by a French group, but what is quite unique about Fidor in terms of your competitors in the region is that you operated not only as a bank, but you also operate as a technology company. So as a CEO, how do you, most banks don't think like technology companies. So how do you operate something that would intuitively, for incumbent banks, be a real challenge?